Hey, good evening, guys. Welcome to this week market debrief. All right, now the current market sentiment is slightly bullish. Main reason is because wait, uh, wait for a few more guys to come in. Okay, the market is slightly bullish. Is mainly because China had a very big move in this past week. All right, last Thursday after our debrief last Wednesday debrief meeting, we are at this moment. I'm talking about here resistance point, and then the next day China bashed through with news that says that their China PMI, Purchasers Manager Index, is at their 6 month high. Meaning to say 6 month high is that they are um, it's already past their COVID period. Their first 3 months the first 3 months of the year is where they locked down their COVID, and then somewhere in April they started to reopen. Meaning to say right now in July they are talking about their purchaser manager index is that their factories manufacturing has started to open, and then the managers has been starting to purchase materials for manufacture and exports and local consumption. So this PMI reading of a 6 month high, right? It shows that the economy is recovering, people are starting to consume, businesses are resuming. So that I think is causing people to think that the whole COVID virus is behind them. And in China, I think they have the right to think so because it's mostly largely contained, except for a few sporadic cases, especially in Beijing. Right, so with this China PMI coming in and coupled with US unlimited QE, yes, it's caused this spike. So this is mainly in China. If we look at Hang Seng wasn't put much up. It's just like China was up for a week, but Hang Seng is only like 3 days. And it tested the Hong Kong tested the upper resistance of its trend line, and then it start to have some reaction or some selling off happening. So which means to say this is purely a very China market centric kind of move. But hopefully in the time to come, in the next few months, that it will pull the rest of the global markets back up. So this is the S&P 500. Okay, and it's looking sluggish despite China's strong move. US is having a very sluggish move by itself. You need to say it's not really, probably because of the trade war. A lot of the trade deal has gone down the drain, and they are not being friendly with each other at the moment. So US has a lot of problems to deal on its own, with a second wave virus happening down in the southern part of US. So this is it shows that the market is considering what is happening. Is still indecisive. It's consolidating sideways at the moment. Okay, so this might also impact the whole global markets in preventing it from moving up. So if we look at Singapore still very sluggish, very weak. Okay, it's just a very small little move pulled up by China, but because we have our election coming Friday, and as I've mentioned last week, I expect a muted kind of sections, Singapore to be quite quiet. So therefore, this is how it turns out. Likely, we have to see Friday, Saturday, what's the result, that comes out, and then next week, we just have to be flexible. If market starts to move up next week, based on some favorable results, I mean, no matter what the results is, if market starts to move up from there, then it's a good sign. Okay, so we just have to follow what the market does on Monday or Tuesday. So as investors, what can we really look at? Last week I mentioned about CapitaLand. So the move by CapitaLand is short-lived, mainly because they give a big dividend, a 12-cent dividend. So this is a move up, reaching what my so-called target, like almost $3.10. It's 3.009, and then it has a XD, it kept down. So we like to see how this consolidation, this rest happens, and we see how it turns out from there. Do note that CapitaLand gave a profit guidance stating that their first half result will be about 25 to 30% less than compared to last year. So for investors, mainly we will be looking more in property. I'm not too sure why, because it somehow come out such a pattern. It's not a very strong market, but it seems to be trading sideways, consolidating, and seems like a higher chance of breaking on the upside. So if market starts to recover in the next 1 to 2 months, we might see this property counters starting to move off. So we have Capital Land. This is Hong Kong Land. All right, it's trading sideways quite nicely. It's tested this $4.50 quite a few times. So if we have up move, right, testing up with higher volume, we can also start to invest in this. Okay, this is Hong Kong Land. City Development, which I've mentioned last week, somewhere here, 1st of July. So it already moved off, break off this intermediate resistance and currently resting just above this support, resistance turn support. So we wanted to see how this one rests, and it's quite a similar pattern, all trading below. Main thing is this 200-day moving average also in city development. Okay. So these are the three property stocks, and one that has exposure to China that has moved off. Mentioned, I think, 2 to 3 weeks ago, somewhere around here, 17 June. Okay, that we can look at yen lot. It's because it's trading above 200-day moving average. The volume is coming in. This OBV volume coming in, showing investors are accumulating in these stocks. So when China explode with their move, big move in the past 1 week, yen lot also followed through together. All right, so we like to see how this move is quite big already. So we will see how this one turns out. If you have a few rest day, it might start to move off again. All right, depending on the situation in China. So you have to look with how the Shanghai index is doing, and then we look at yen lot. Okay, so that's all for the investors portion. Not much in terms of others like SIA. SIA is not really doing that well. From here is doing a consolidation, but at this moment is this high, right, has all been downward sloping. And the way how the moving averages are moving, we can look at the volume. The cumulative volume is all pointing downwards. People are really, or investors are not really investing. The big guns, the institution, are not investing in this, are not accumulating in this. So SIA, we should still avoid, not go into this yet. So we'll go on to the next portion for traders, because I think right now market is starting to be bullish. There will be a lot of trading opportunities happening, and the biggest and strongest sector, need not to say, is the medical sector due to the pandemic. Now this is MedTech. Previously, somewhere here, 23rd June is one of our debrief meeting, mentioned about this supporting. The support is holding well. When it starts to move forward, we can invest in this or trade this. So now it has already done a parabolic move, like 100% upside, which means to say we really have to stay off, not to enter, not to chase. And if you do have, it's time to take profit, okay, and get out of this stock already. As this move is quite euphoric. Now the next move we would like to see, right, if it can rest this, we have to give it a minimum of 1 month to rest at least. The longer the better lah. No, 3 4 months is even better. But at least to me, my requirement is you need to rest 1 month in order for it to have any more upside to go. Right, so we just have to wait and be patient. Similarly for UG Healthcare, giving the same kind of move. Okay, this is not quite of a euphoric move. It's quite evenly spread. It may still have upside. Okay, the volume is not really coming in. If you start to see a big volume move in, it's really the end of it. But to change into this type of stock is really not good for the risk and the heart. Okay, so to me personally, I will still stay out from this. So you can see most of the medical stocks are all COVID related. Okay, Singapore e-development. Previously, talked about this, rested for a few days and then it start to move off again. So in such a case, this is more like 100% move already. We just have to wait for it to rest, before we look into the stock. So similarly for all the other um, COVID virus related stocks, Riverstone, Top Glove, all have similar move in the past 1 week. Top Glove. Okay, Top Glove may have more move. Firstly, because there's a consolidation here. What we want to see if it can rest sideways to form. This is like a cup pattern. We like to see if it can form a handle pattern over here. So if it's a shallow handle pattern with low volume, we can look into buying to Top Growth for the next run. Hyphen Pharma. Not too sure. I know this day one of the directors has bought into this stock. Probably he also bought into this stock. So there's this volume coming in these few days. The directors are buying big lots. This I forgot his name, but he bought like 1 million plus shares. So this will be also another 1 million plus share, depending on the news tomorrow. Which means to say the insiders are buying. And we know results reporting is coming soon. So we would like to see, I think there might be some upside into this. So you can look into Hyphen Pharma if you can break out this so-called intermediate resistance. Okay, roughly about 33.5 cents. So we can break off this. It will be a positive sign for this stock, Hyphen Pharma. Then of course, for those who like penny stock, I personally do not like Healthway, mainly because I go to their clinics and a lot of their doctors are not very good. But in terms of the chart, it looks quite nice. Some rounding pattern here. So and there's a volume coming in today, but it's ultra penny. So it's merely a hit and run. When let's say if you were to buy 3.5 cent, when you reach 4.5, you should be happy and take a profit and get out. Okay, earlier I did not mention about the gold stock, gold futures. So let's take a look at the gold futures. Previously, I mentioned about the gold has been making a new high already. After the break off, last week is here, and now it has already attempted or make a new high. Okay, so in Singapore context, we only have this stock, CNMC, which I mentioned before. So it has a gap up, it rests a few days, and then it already moved off for the past 1 week. Right, today making a new high. So we like to see if this one can rest again, and then see if we can take a next trade on this. So one thing is for looking at how the gold price is moving is that despite the market being strong, usually market is strong, the gold tend to be sluggish. But now gold is moving in tandem with the market upside. Meaning to say they are at this period of time they are correlated, which is seldom the case. So um, it gives a lot of suspicious or divergence signal in this market up move. So we just have to be very careful. One thing why the gold is going up is also because of the US unlimited QE, in which they are printing their money, which cause the value of dollar to go down and asset prices to go up. So many people are putting their money into stocks and gold and some other safe haven. So this the medical sector is the strongest sector. Last week I talked about the electronic manufacturing sector, AEM, Valuetronic, UMS, Venture. So the past week, the whole sector had a move. Okay, Venture basically inch up a little. As I mentioned, Venture is a big cap. It's a little bit difficult for it to move. Uh, so yeah, there's a small move by Venture. But if you like safe, stable, big cap companies, then Venture is the way to go. But if you like small cap, bigger move, then you have to look at other companies. This is UMS. So I mentioned about here, and then it went up and test the resistance. Okay, so in this move, it's been staying above the midway point with low volume, just trading below the resistance. So we just have to watch out for this. There's a high chance that it might break on the upside. Okay, this is Valuetronics. So previously was here, and then it has a two big move. Okay, it's a two big move. So if you can see, if you can rest sideways, you can look for next trade to trade up. AEM. Last week I mentioned that it's going to test the top side of the resistance. So the bad thing is, or not the bad thing, the not so good thing is that it gap above the resistance and trade down. All right. The good news is low volume. So which means to say only the retail are taking profits out of this company. So if you continue to trade sideways, today's up move, right, there's volume, is a positive sign. So you can see if you can trade sideways one more day or 2 more days, if it's quiet and low volume, right, then there's a high chance it might break on the upside. Very high chance. All right. So this is AEM. And one more, which I totally forgot about it. Hype. Okay, so for just now I keep on mentioning wait for low volume, low volume. Can you see this volume? It starts to gets down to be very quiet like these few days. Very quiet, very small range, right? That's when it's about to move off. Okay, so similar. So same with others, it had this move off. I think there's a news something that Apple is expected to manufacture like 80 million of iPhone 12 or something, and then Hype just move off, bang off like that. Firstly, I think they are one of the manufacturer for some of the Apple components. Okay, and some other stocks. So mainly these are the two sectors in Singapore that we should be looking at, yeah, at this moment. And since China is moving up, we should probably also look at some of the Hong Kong stocks. Uh, Mainly, we'll be looking at these two, the medical sector and the electronic sectors. Hong Kong is also showing the same kind of pattern. Okay, so this is Xiaomi. Is technology, telecommunication equipments. So it has already broke off from this come and handle pattern, and then it's move off. So we like to see if we can rest. Hopefully can rest for a few days, trade downwards. 14. Hopefully can test its support $14. You can look at there is a good place to buy. All right. This is Xiaomi, and of course, their giant Tencent. Tencent already. Oh, when I first started off this video long ago in March, I don't know if some of you remember. I think Qi Yang was there. I mentioned about Tencent breaking off already this resistance. So right now it's already moved off from here. Okay, so we see if we can pull back, make a nice pullback, something like this, pull back, and then trade towards the 50-day moving average, and then we can look to trade somewhere there, or look to invest also, in the next mid-term trade, like 3 to 6 months. So a lot of these technology software companies. This is Kingsoft. Okay, also has already made off this move. Similarly, we just have to put them in a watch list, wait for them to pull back. Now, some of the trades which I think might move, or we can look for in the next few days. This is Binjiang Services, dealing in real estate development. So today just had a break. All right, it broke off from this similarly a cup and handle pattern formation. It's a nice clear break. Okay, if you can rest a few days, even better. If it move off, you can take a 1 day trade or 1 day or 2 day, depending on how this one turns out. Do make sure you do have your stop loss in place, because China had a very big move. There might be profit taking happening. Okay, so we just have to be careful. There is this medical company. This is PA Good Doctor. So dealing in health services. So yes, this rounding pattern quite nice, attempting to break out. So if we continue to like slowly move off, we can look to take the trade. So if we are looking at this Ali Health, okay, it's been trending nicely. So recently has a high move, uh, increase in volume in this move. So we'd like to see how this one turns out. You can trade if we can pull back and test the 50-day even better, something like this, test, and start to move off, you can look to buy this and trade. So these are mainly the few counters that I saw in Hong Kong. What we can do for short-term trade or even for mid-term trade, like Tencent, Kingsoft, Xiaomi. Mainly, we just have to be patient, monitor, and wait for some of the big cap stocks like Tencent, Xiaomi to pull back, to the support region to before we take the trade or invest in the companies. So something like this, we'll wait for it to pull back and consolidate. So in summary, we just have to be careful at this moment because firstly, China had a very strong move in the past 1 week, which is a good thing. The only thing is this one is just like one straight line up. Uh, in the short term, tends not to be sustainable. So we just have to be mindful. Hopefully you can see it can rest sideways. Then that's a good sign. Okay, and the results seasons is coming. I will have to do some research, to find out what are the stocks that we can trade or expect some good dividends to happen. Okay, so in this period of time, we can look into dividend trading. Okay, how do we look at dividend trading? We can look at stocks like Escort REIT. Okay, why I talk about something similar to Escort rate is that Escort rate give twice semi-annual dividends. So the thing is, when by the time they give the dividends, it tends to be quite big. All right, like 3%. Traders tends to place or position themselves in anticipation of this big dividends, but they tend not to hold through XD. They tend to sell before XD. Okay, so these are some of the dividend trades that we can look at, especially those that gives dividends semi-annually and has high dividend yield, like 6%, 7% kind. Okay, so we just have to do some research, look out and sift out for these stocks.